I have a chart here. This is actually the VantagePoint Intermarket analysis software. If you're not familiar with it, not a big deal. You understand exactly why I use this to do my market analysis in the evenings. Now, here we have a chart for Spectra Energy here, symbol SE. All of this, again, exactly like the chart that we just looked at, daily bars and candles are for the price data that you see on the top of the chart here. But here's what I need to show you guys. If you look all the way to the left of your chart, I've gone ahead and typed Spectra into the search engine. You see, we do forecast for a very wide number of U.S. stocks split up by sector there. But if I go ahead and we type in Spectra Energy, I can come here and right-click on this Properties tab and bring up what's called the Intermarkets. Now, guys, this is the secret sauce here. This is a thing that no one out there in the markets is doing. There's actually 2 patents on this technology and this approach. But for Spectra Energy, now we know that any stock's going to be driven by currency valuations. It's going to be affected by ETF groups. It's going to be affected by other companies that are in the same sector. Well, what the VantagePoint software is doing is actually utilizing a type of artificial intelligence called neural networks. Now, what neural networks are able to do is scan through huge amounts of data, learn those significant relationships in the data, and forecast short-term prices. Essentially, it's analyzing those global market relationships, incorporating all that data from the 25 to 30 most closely related markets that are known to affect Spectra Energy, and then producing an output. So to forecast short-term price, both the direction, but also short-term strength or weakness in the market. So we can use these tools to make much better trading decisions, but these trading decisions are actually based off what's driving the markets. If you look here, we have plenty of these ETF markets, the energy sector spider, dividend value index, but you've got those big macro markets as well. I don't know how many traders are getting into the markets, taking trades on stocks, and not even paying attention to what is the dollar index doing? What is the crude oil market doing? What is, in this case, Spectra Energy? What is natural gas doing? Critically important for every single trading decision that you make. And what you have to understand is as that trade moves forward, as you get into a market, take a position, and need to decide when to hold on to a market, all those global market relationships are changing and offering extremely valuable information on whether that market's going to continue in a trend, reverse, or show some short-term strength or weakness. So that's the secret sauce. There's actually 2 patents there on that approach and on that technology. Now, let me go ahead and explain, though, everything that we have on the chart here, because this is very, very important to understand these indicators. Now, again, daily bars and candles, but you're going to notice that there's a black line there and also a blue line on the screen. Now, guys, the black line on the screen, that is a regular simple moving average. Let me know if you've used a simple moving average before. Type yes. Let me know in the question box if you're familiar with that. But what a simple moving average is very, very basic. It's simply taking the last, in this example, 10 close prices, or however many days you want it for, dividing it by, that number, and then plotting the value of the indicator, essentially. So, the problem with, traditional moving averages is that they're completely based on past price of one market. And so they really lag what the market has already done. It's really what's referred to as a lagging indicator because it's only going to react to whatever the next day's closest price has been. So it's just going to react to where the market's already been. Now, that indicator, you can get anywhere you want. Anywhere, pretty much any platform, you can use simple moving averages. But now, this blue line, though, this blue line is VantagePoint's proprietary predicted moving average. Now, that value isn't plotted until those 25 to 30 global market relationships are weighed, quantified to plot that value. And so what it's doing is actually predicting where the moving average will be ahead of time. So rather than having lagging indicators that are going to react to recent close prices, you're looking and scouring out at those global market relationships and plotting future price. Now, as an indicator, this is very simple for us to use because as traders, we really want to be looking for really fresh trend changes in the market. We want to be aware of when a trend changes so that we can start exploiting that new opportunity, that new reality of how the market is trading. So what we want to really be looking for to get into a position are essentially these crossovers between that prediction and that actual moving average. That tells us that, hey, if the predicted moving average is plotted higher than the actual, well, you should expect prices to move higher, and then vice versa as well. But how this is so effective is because it's constantly weighing those global market relationships. It's not simply going to react to whatever short-term price is done. It's going to be able to hold up and be a lot more robust during these times of consolidation in the market. So you see that, over these periods of time where you get this huge pullback in the market, sure, the predicted moving average and actual moving average are very, very close. And you see that, moving forward over the next few trading days, the market really isn't moving much at all. But when you get that separation, so when the prediction starts to really create that separation from the actual, it's indicating that there's a lot more strength in that trend. And so that's how you can really determine the strength and weakness of that directional move. But certainly in a situation like this, you're going to know that, look, you want to be maintaining long positions on the market. As long as that blue line remains above the black line, the market is still forecasted to move higher, and therefore you would only want to look to take long positions. So you see why this is critically important, because how many traders were getting out of the market here, but you simply do not have a crossover. It still remains, that blue line over the black line. Now, those predicted moving averages are extremely helpful. They don't get fooled very often. They're going to hold up, remain on the right side of the market more consistently, but it's really how we use this approach of both indicators together to get essentially that forecast for where's the market expected to go. And, this sort of gets back to, this isn't a set system, guys, and it doesn't really matter what your overall trading strategy is, whether you trade options, whether you're short-term, long-term. The reality of trading those, you have to know what to expect in the market to make those intelligent trading decisions. So you have to know, hey, I know my direction is still up or down, but should I expect short-term strength or weakness, and how does that really affect my position in this trade? So what helps us to really do that, and what I know, shorter traders absolutely love this indicator because it's so easy to use, and it's just extremely straightforward. It's the predicted neural index. You see at the very bottom of your screen here, we have P index right here. Now, this indicator, it's very easy to use because it can only be a value of a 1 or a 0. So it's either one or the other. It's extremely accurate. And what this indicator is doing is letting you know if prices are expected to be higher or lower over the next 2 trading days. So it's essentially a short-term forecast looking 48 hours ahead, looking for short-term strength or weakness in the market so that you can anticipate what's going to happen in the market and make intelligent trading decisions off of that output. So you see, here we get this crossover to the upside. So that's when it says, all right, the direction has changed, look to go ahead, get long the market. And notice that when this neural index is positive, you get that essentially that miniature trend in the market, that bullishness in the market. Same thing when the indicator is negative. You see over this period, you're going up, you're going down, well, the market is completely going sideways. So that prediction is essentially changing. But once that separation starts to happen, you'll see how accurate this indicator is over these long periods of time. You see it dips down to a 1. Well, what are we getting? Some weakness in the price action over the next couple of trading days, but overall direction still up. Blue line and black line still very separated, so you want to go ahead and maintain that position. And so this is another period of time where a lot of traders probably get slipped up, get a little impatient, want to go ahead and really, make sure they don't lose out on those profits that they made to the upside. Maybe go ahead and tighten up stops way too tight, just go ahead and get out of the market. But these are not intelligent decisions, for what's really going on in the market. When you can anticipate that short-term weakness and adapt to it, you see that neural index back up to a 1 shortly thereafter, and what's happening? Market's moving aggressively higher. We get a pullback from the neural index down at a 0, market trades a little bit lower. Again, neural index down at a 0 on this day, market trades a little bit lower, but the blue line is still above the black line. And that's what's telling you, look, hold out on your overall position, stay exactly where you are in this trade. There's no need to go ahead and be getting in and getting out of it. If your shorter term strategies call for that, that's certainly all right. But you don't want to go ahead and be jumping out of these sorts of opportunities where you can get a great entry into the market, really lock your stops at break even and catch this 18% move to the upside, about $5.80 a share on about a $30 stock over the past couple months of trading here. So, if you really want to see those results and capture those big moves in the market, you really need to be positioned ahead of time. And this is something that's so critical. So many people get caught up in the news and what's going on with Brexit and all these other things. The reality is when that volatility comes into the market, you can't then react to it. You already have to be in your positions. And so this isn't really a game where you want to go ahead and trying to be reacting to whatever the current news is or where everyone's excited or what market you think may have some great opportunity. You really just want to go, hey, where are the probabilities at? When should I be going ahead and getting into markets, and how should I adjust those positions based on what my goals and my objectives are for being in the position in the first place? So there's one example there in Spectra Energy, just from those slides that we had earlier, but there's plenty of examples where traders get tripped up in the markets and simply don't really have the right tools and analysis to sort out this sort of information and really make these sort of determinations. And that's really the benefit of using technology, is that it's really able to analyze data that we wouldn't be able to analyze. I mean, simply analyzing 20 or 30 markets every single night of how they're affecting and influencing the markets you trade in, you have to utilize technology to give yourself an edge here and really be competitive in these markets. But you see the situation in Vulcan Material here. Markets really clearly forecasted to the downside, right? I mean, very simple. We want to keep these things very straightforward. We don't have to overcomplicate the process. But cross over the downside, saying the overall direction is to the downside. You see our neural index went down, came up to a 1, but how many people are buying into the market here? So how many people's tools, they're using moving averages, they're, looking to go ahead and trade that momentum, and that was the worst time to go ahead and get into the market. I mean, it's literally gapping down against you and moving lower over the consecutive days here. I mean, not a great time to be getting into that market. I'm sure a lot of people got fooled there. Well, if you're utilizing this approach that has a much better technique of really analyzing, hey, has the direction truly changed? Is there some short-term strength over the next couple of days that you should be aware of? Well, you see, it isn't until this opportunity here where it says, look, crossover to the upside, neural index up at a 1, now's the time where you want to go ahead and look to take long positions. Certainly back here, it's actually saying, look, hold out on those short positions. These are great days to go ahead and short. You see how weak the neural index is, as well as that moving average. But once you get to this point on the chart, it's saying, look, the direction is up. Your bias should be to the upside. Go ahead and use those shorter term indicators to go ahead and, if you want to go ahead and push your trades, have bigger positions when that neural index is up at a 1, whatever your strategy is, but making sure that you're clearly defining these things of when has that direction changed and when should I go ahead and look to interact with the market. So great example there. Last opportunity here is from the stocks. Actually, I got a few more opportunities here. So how many traders, one of the most difficult things is, getting into a market, not really seeing what you want to see right away. And a lot of people have that patience really comes, sets in, and really causes them to make emotional decisions in the marketplace. Here's just another quick example, and we can actually run through an example together here, guys. But blue line over black line, keeping this very simple. We can really breeze through these examples once you understand how to interpret the forecast. So you see, that's where the directional change came through. You get that confirmation from the neural index, but you see that the environment changes. It says, look, be warned of some short-term weakness over the next few days, but as long as that blue line remains over the black line, you want to go ahead and hold out on that position. So it's easy to go ahead and wade through these days here when you understand that, look, until that blue line crosses the black line, I'm going to go ahead and remain in this position and not go ahead and get rattled. You even see here, this is more near the Brexit vote, but you get all this volatility, a big gap down in the market, but this moving average is actually still slanted higher. I mean, it never even starts to turn lower, still saying you, look, hold on to the market, stay in this position, and so far it's turned into a really nice move higher. Now, this is the key, guys, is, to have the patience to hold on to these sorts of trades. I mean, you really need to have the proper tools to really make that clear determination of when you need to go ahead and get out. A lot of these markets are still trending higher, but the reality is markets change direction all the time. So if you can go ahead and make those determinations early, it's going to be a big help into you making the proper trading decisions at the right time. So we can work through this together, though, guys. I mean, you know, what's nice about the software and what a lot of people gets lost on them really is that, you know, these indicators are truly predictive. I mean, the values that are plotted by that predicted moving average, that blue line, and that neural index are plotting future prices ahead of time. So this is what's going to allow you to react to changes in the marketplace, to really be really adaptable with how things are changing. So, you know, based on that, I mean, do you guys understand those simple indicators, how we explained everything of blue line over black line telling your overall direction of those predicted moving averages, and the neural index being a short-term 48-hour forecast of short-term strength or weakness in the market? If you think you understand that, go ahead, type yes. We'll go ahead and work through this example together and show you how things can change and what you're going to see to help you understand, okay, well, what would I be doing? Does this make sense? Is this something that I could manage here? Now, here's Kimco Realty. Now, I've gone back in the chart, we're back a couple months here, but this is how things look for a trader when that market's coming through that day. So you see we had a big down day in the market, blue line below the black line, neural index down at a 0. So what are we doing here, guys? Are we buying the market? Are we selling the market? Are we buying puts or calls? What would you do here based off of this forecast if you had to trade the market? So based off of this forecast, I see some people saying sell, sell, short. So tell me not only how you're going to get into this market, but how things are going to change for you as things move forward. So blue line over black line, neural index down at a 0, saying go ahead, short the market, right? So you have a short-term move in the neural index higher, but a lot of separation, actually getting more separation on that candle to the upside. So as prices move forward, see neural index down at a 0, a lot more weakness over the next 48 hours. Trend obviously to the downside there still. A lot of separation between the blue and the black line there. So I see a lot of sells, here. I see some questions about scanning. Yeah, that's one of the nice features about this is you don't have to sort through all these crossovers. You can go ahead and scan for these, have all these crossovers presented to you, but take a close look at this chart here. So what is happening here? So as a trader, you may have gone ahead, taken a short position in the market. You see neural index remains down to a 0, moves up to a 1 for just one day here, but what starts to change very, very early in this market? We see that the neural index is up for 4 days in a row, keep signaling short-term prices to move higher. Uh-oh. All right, and here we go, right here. So the next trading day happens, and now what do we have? So what do we do here, guys? Based off of how we interpret the forecast, how we manage these positions, we could have gone short way back on May 16th or mid-May, or gotten out of our long position, but now we're getting a crossover to the upside. So I see, what are we doing here? I see long, long, buy, comprar, excellent. Our Latin American friends. Now, crossover to the upside here, neural index up here at a 1, telling you, look, go ahead and look to take long positions on the market. Even if you're a short-term trader, if you're a day trader, you see how accurate this neural index is really forecasting that short-term price of what you should expect. But once that market changes direction, certainly I see a lot of you getting it right. You want to be a buyer in the market. Now, as long as that blue line remains above the black line, guys, maintain your position. As long as the predicted moving average is above the actual moving average, it's essentially still forecasting that you should expect prices to trend higher. If you look at the neural index here, you see again we get that short-term weakness in the market that you experience over the next couple of days, but blue line and black line have so much separation here, you're just going to hold on. The trend is projected to still continue higher. See more consolidation, predicted higher, 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 higher. And then what happens more recently here? We just recently had a crossover to the downside, a ton of weakness from the neural index, really way ahead of time, saying, hey, look, maybe look to decrease the size of your position, don't look to be aggressively getting long, expect some weakness over the next couple of days. And we see here that, over a couple month period here, you've been able to trade this market effectively and make good trading decisions. I mean, right here, this move, which you'd just be getting out of over the past, 3 days ago, but a 12% move higher. And of course, if you're willing to short the market, that's after probably about a 5 or 6% move to the downside. So, you really just got to think, how am I making trading decisions in the market? Do I have tools that are accurately forecasting, short-term prices so I can make an intelligent trading decision off of those probabilities? guys, I mean, the neural index, that neural index at the bottom is consistently up to 86% accurate. So if your trading decisions are in line with a tool that's consistently accurate, but accurate at, not just accurate because it, may be accurate on a certain market, but constantly analyzing those global market relationships can make a huge difference. I see a question about here, a guy saying he works with stops. Well, that's excellent. You should go ahead and work with stops, but I certainly want to be getting into the market when that market's going to have that push in the direction that I'm looking for. So, if you have shorter term methodologies, if you even want to incorporate fundamentals or however you like to trade, you can go ahead and do that. But my goodness, you certainly want to be trading in line with what these forecasts are telling you in a very straightforward general way of, look, direction up, neural index up, you want to be long. If the neural index is down at a 0, you're waiting until everything lines up again to go ahead and push those positions, and that's when you can run those tighter stops on the market. So, guys, why is this so important? Why are having tools like this so critical? Well, I mean, it's situations like this. I mean, when you have a tool that you're able to identify trend changes in the market, you can enter into those markets and at least get that short-term move in the direction that you expected with a really high level of accuracy. Well, you can get into markets and really trail your stops. See the guy talking about being a breakout trader? Well, that's how you do it. When you identify that there's been a trend change, and you can identify that trend change early, you can take positions early, get those really great entries, so you can lock that stop in at break even and really ride out that breakout or major trend reversal. So you see here all the way back in, some of these pharmaceutical companies have just been going absolutely crazy over the past few months. The forecasts have been extremely accurate, but I certainly want to be aware that there's been a directional change all the way back here in what looks like April, telling you, hey, now's the time when you want to be paying attention to this market. Now's the time when you want to go ahead and look to get long, because if you come into the market during this period of time, if you come in a little bit late, I'm sorry, it's over, guys. That's going to be a very difficult situation to go ahead and trade when you're pretty much having to look at, you've got about a 17%, 18% decline here in price over 5 or 6 trading days. So, even for traders who get into the market, catch that push higher, dealing with that 15 and 16% decline gets traders' emotions moving. It gets them really reactive in making decisions that they really shouldn't be making if they want to, be profitable and improve the P&L on their account every month. But you see how this works. I mean, after that 15% decline, you need to be able to get in the market way back here, wade through that so you can catch this with, 98% from there, about 113% move to the upside. So guys, I mean, literally, this is a $4 stock, a $3 or $4 stock. We've seen all these things. It's the exact same thing happen on things like Cordialine Mines. Exact same thing. Forecasts were absolutely great. The markets moved from about $2 to $11. But that's what you need to go ahead and capture with your trading. But you need to go ahead and, again, determine that direction and have the proper timing so you can catch that move. I mean, literally, a stock like this, a couple of thousand shares, I mean, you're looking at what, $8,000? About $8,000, $4.50 times 2,000, so about $9,000 on one trade, a small position. But because the timing was accurate, you can go ahead and take that trade and make a ton of money, even if you're working with a small account. So, there's even tools where you can go ahead and sort through low-price stocks, high-price stocks, certain volume, whatever you want to sort through. But the best thing you can do for yourself is to, utilize a tool that's consistently accurate at forecasting these short-term prices. But by doing it, by paying attention to those global market relationships, which is really what's driving and impacting and affecting those trades that you get involved in. So when you get in a trade, you're holding it for a few weeks, and then everything turns around and you don't get out at the right time. Often that has to do with these major markets changing direction, things happening in markets that you're not paying attention to. And that's where the software can really give you a heads up and help you out.